Hello, and welcome to another episode of the AI Cash Grain podcast. I'm Satish Nandapurkar, Director of Data-Driven Strategies for Quantum Hedging, and today is August 16th. In this episode, first we'll go to Cy Monley, as always, and he'll talk about what's going on with corn and soybeans. Corn was pretty much unchanged, down 2 cents to $3.92. But given the data that came out during the week, soybeans got absolutely crushed, down 45 cents to $9.57. So Cy will be talking about that and what the trade and what the traders are looking for going forward. Will we continue to slide, or do we think we found a bottom here? Or at least what do the traders think? Then we'll go to Kevin, and Kevin will talk about what the models think. With respect to corn, the models think that we are going sideways, that we have kind of found a temporary bottom, and then maybe even an upturn, a little bit of an upturn later in the year, or past September. With respect to beans, though, the models are thinking maybe a slight correction against how far they've slid in the short term, but then lower in the long term. So the models are thinking a little bit different for corn and beans. Kevin will talk more about that. And then finally, our recommendations, again, for this week are to hold. Given sideways nature in corn and mostly sideways nature in beans, we're going to continue to be slightly oversold in corn. We're going to continue to be neutral in beans. Wait for more data that's more convincing. Let me turn it over to Cy. Cy, what's going on here? Obviously, beans had an awful week. What do you see?
Thanks, Satish. It's more of the same in the corn and the bean markets. The weather looks really good. The market's grappling with record high yields. Last week, the USDA gave us record yields. And I think now, as we've been talking about, the function of the market is to go price in that demand. And I don't think during the month of August, we're really doing that just yet. The goal is for the next 2, 3, 4 weeks to go find that demand and get the farmers to let loose of their grain. So until proven otherwise, we're just drifting lower. Now, last week, you did see our models turn higher into the month of October, which I think is interesting from a fundamentalist standpoint. Why? Because that's the pricing of the insurance. So I think if you're a farmer and you've got insurance checks waiting, I think you should start to think about, how do I protect that insurance check? So this is an interesting time here for the U.S. farmers starting in the month of October. Kevin, do our models still show markets moving higher in October?
Hey, thanks, Cy. It was another down week in the markets. Beans especially hit hard with a 45-cent down move. Corn managed to only lose 3 cents on the week, but we sit firmly below $4, which is what we've been calling for quite some time. And so, Friday's close at $3.92 doesn't give us a lot of hope for optimism, and the fundamentals and the factors that go into our model are not really suggesting a big turnaround, but maybe some modest move above $4 as we get towards the latter half of October. And that's sort of along seasonal lines, but our model's predicting a little more of a seasonal bump, probably because of the bigger sell-off we've had of late. And that's kind of the trajectory. Like when you have sharp sell-offs in kind of that July-August window, then you tend to get some sort of bottoming in call it September, with a potential turnaround into October. And so that's kind of what our model sees. Not a lot of optimism here, but for those of you that are now kind of in the money in the insurance world, that is something you're going to want to watch closely. Obviously, if we were to see prices kind of climb back out of the high $3 and into the lower $4 range, we might start to see some of those payouts from insurance start to lose ground. So keep that in mind. At Quantum Hedging in our Managed Acres program, we manage that quite closely. So if you're interested in some support with that, reach out to us. Probabilities, pretty much about the same. Our end of August forecast, not much different than where we sit today. But beyond that, our model is giving us a little more optimism to get us back above $4. Last week we were, not seeing much optimism for getting above $4, but there's a slight chance now that we start to get at least peak our head above $4. But no sort of serious turnaround here between now and harvest if you are looking to make cash sales. Soybeans, really hard week, really down week, 45 cents down. I think, on these sharp down moves, this is where our model starts to look for a little bit of a bounce, maybe the possibility to go back and try and go back to high $9, maybe try and make a run at testing 10, but not a lot of optimism that we make any sort of serious recovery in the big losses we've had over the last couple of weeks. And especially if we look back all the way to January. January we were in the $12 range. We've lost over 20% in feed prices and corn prices as well, and so we're just not going to find much probably in the next month and a half as you're getting close to harvest to really kind of change the economic outlook here as we move forward. So that's where we're sitting today. Satish, what are you seeing from your standpoint?
Thanks, Kevin. As I mentioned, when it comes to recommendations for this week, the recommendations are to hold both in corn and to beans. And again, our goal here with AI cash grain product is to outperform our benchmark. It's always good to have a benchmark so you can set goals and we can simulate and quantitatively figure out what the optimal strategy is to beat that goal based on our forecasts and our confidence interval. So our benchmark is a predetermined selling strategy that sells at the end of every month from January through October. And where do we stand? Just sort of reviewing with respect to corn, we're 60% sold. The benchmark is 55% sold. We're about 12 cents ahead of the benchmark, which is great. Where we've sold, we got oversold back in June, at the beginning of June, right before corn kind of plunged from the 470, 475 level down to the 4 even level. So we kind of called that well. As a result, we're 12 cents ahead of the benchmark. We're tracking to about a 10-cent win because right now we're only 5% oversold. If we sit right here until October 31st, we'll basically end up averaging to about a 10-cent win versus our benchmark, which is great. And again, for this week, we are holding until we get some more data. End of month is coming in 14 days, in 2 weeks. With respect to beans, we did get a little oversold right there at the end of May. We are now flat and neutral against the index. We're 55% sold. The benchmark is 55% sold. 55% sold. We're about 8.5 cents above the benchmark. We now have a neutral stance. And again, we have these stances in corn and beans because the models aren't really telling us much in terms of deviation going way up or way down. Both models, corn and beans, are kind of pointing sideways with a confidence interval around that. So with beans, it's been a little hard. I wish the models would have picked up on this big drop, from the beginning of July to where we are now, where we went from around the $11 range to now down to the $9.50 range. But the models just didn't have a lot of confidence in there, and that's why we were neutral. Again, that said, we're tracking 8 cents ahead. We got short kind of at the top there in May. We got a little shorter. We closed off that short a little bit early. The models just didn't have the conviction to keep that short on, so we closed off a little early. So we're only tracking to about a 5-cent win versus the benchmark in soybeans. So a quick summary and recap. The USDA report on Monday was obviously the big deal. Corn and wheat were fine coming out of that, but soybeans, the ending stocks were huge. Therefore, corn kind of turned out flat for the week. Soybeans just got crushed, as Cy talked about, and what the traders are looking for there. Our models, neutral in corn, going out the next couple of months, maybe a little bullish in the back end. Beans, maybe a little bit of a bounce back from all the selling we've had in the short run, but lower, unfortunately, in the long run. And with respect to our models, the models are kind of saying, and the simulation is saying, hold. We're slightly oversold in corn. We're neutral to our benchmark in beans. The models are saying just hold with that. Let's see more data that comes out. We're getting to an end of month will be in 2 weeks. So we're going to wait for that data and see what comes out. So again, thank you for being a listener. Thanks for subscribing to the AI Cash Grain podcast, and we'll see you next week.